Okay, last time we looked at how we record transactions into T accounts. What we're going to look at here is a little more about the specific process, about how we actually record transactions and summarize them. This next piece is really the first start of what we do in this time period to take our inputs and process them and do these outputs, right? So these two things. One of them is the general journal, right? The general journal is the place that we write down the transaction when we first run into it, right? Some people here call it the book of original entry, right? Book of original entry, and it's where we just record this transaction, right? And we're going to look at an example of that in just a minute. The general ledger is just a collection of all our accounts, right? It's a collection of all of our accounts. So remember, we talked about assets and liabilities and owner's equity. Well, an example of asset is cash, right? Well, we had a T account for cash, and we'll have a general ledger account for cash, and we had a T account for accounts receivable. We'll have a general ledger account for accounts receivable. The individual parts of the general ledger are really represented by a T account, right? A T account is a place where we collect information about like things, and a general ledger is really just a collection of all of our accounts, right? So these two forms. So you'll hear the words journalizing and posting, right? We run into a transaction. The very first thing that I do is I journalize it in the general journal, and then I post it to the general ledger. Now we're going to do this kind of through example, right? So the first thing I'm going to show you is what a journal looks like, right? What a journal looks like. So it's just a form, right? It's just a form that looks like this, right? It's got a date, it's got a description, it's got a posting reference, it's got a debit and credit column, right? Remember, debits are always to the left and credits are always to the right. So this is where we're going to record these transactions, and this is the form that we're going to do it. Let's say, for instance, that the owner or the person invests $8,000 into the business, right? Well, let's analyze that transaction. We know that when you invest $8,000 into the business, cash goes up. Cash is an asset. We're going to debit cash. That person's ownership or represent the amount they own in the business, their worth in the business increases. We do that with a credit. So I know I'm going to debit cash and credit capital, right? So here is what that transaction looks like in the journal entry. Now this isn't really hard, but you have to get used to some of the form that we have, the common way we write things down. We always have the date. Debits are always first. Debits are always listed first, no matter how many of them we have, and it's listed under the debit side of the thing. Note that the credit is indented just a little bit, right? We have that little bit of space there. That's indented to demonstrate that it's a credit, and the credit goes over here. And then remember, every journal entry that we have has a debit that has to equal the amount of the debits equals the amount of the credits, right? So that's all there is to a journal entry, right? Your book is going to talk about describing it. I don't care if you describe it. I don't really want you to describe it, right? I'm more concerned with doing the transaction. So this form matters because now for at some point in the future, I'm going to write the words cash and capital, right? And when I write that I've just written what? A transaction that debits cash and credits capital, because debits are first and flush to the left and capital is second, and it's indented, right? So that's why we use that form that way. If we look at a bunch of transactions, right? We have a handful of transactions here. You can see they all follow the same format, right? The date, debits are first, credits are second. Here what they do, they purchase supplies for cash, right? Supplies goes up with a debit, cash goes down with a credit, right? And again, I don't care about the description. Cash and fees earned, right? We did work. We did work and we got paid right away. So what? We debit cash to make it go up. We credit fees earned to make it go up. So I collect all of my transactions in this journal, right? Which is all well and good. It works slick as can be, right? Except the problem is if I have 5 pages of this and I want to know how much cash I have, it's a problem, right? So I want to take all of my all of my transactions for each account and group them together, right? So all the cashes are together and all the capitals are together and all those kind of things, right? That's where this general ledger comes in. Like I said, a general ledger is a collection of our accounts, right? So here we have a little sample of a ledger, of a general ledger, all right? So look, we got cash, we got supplies. This is just a sample. We would have one of these forms for every account that we have, right? So we have a place to keep all of our like things together. Problem is it's blank, right? There's nothing written in there. And the information comes from where? It comes from this journal, right? So our job now is to post things from this journal we just looked at to this ledger. Well, here's our process, right? So if I look at this journal, the first thing that happened September 1, I have a debit to cash for $8,000, right? So I take that debit and I find cash in my ledger, and it is September 1st. I'm just going to leave that blank. This comes from page 1, right? So I'm going to go to journal, page 1. It's a debit of $8,000. Now, balance, this is where I keep track of a balance, right? So if I had no balance before, then I debit this account for $8,000. My new balance is $8,000, right? Last step, I bring that number 10 back here and I mark off that I have posted that cash transaction, right? So now I've updated this general ledger account cash for the first part of that transaction. Okay. Next one says what? S. Morgan Capital, credit of $8,000, right? So I'm going to take and find the capital account. There it is, and it's what? 9-1. Leave that blank. From the journal, page 1, remember it was an $8,000 credit, no balance, and then a $8,000 credit gives us a credit balance, right? My last step, I bring that 31 right back to there, right? I bring that 31 right back to the journal to show that that's been posted. It's been updated to the general ledger, right? So my general ledger now shows those things, okay? Let's do the next one. The third, we debit supplies for $200, right? So we find our account supplies and we go 9-3, journal page 1, a debit of $200, no starting balance, so my balance is $200. And then I bring that 12 and I bring that right back here to show that supplies has been posted. Now here's what I want you to see. The next one is cash, and this time it's a credit to cash, and we know a credit does what to a cash account? It makes it go down, right? So let's post it. The third, credit to cash, $200, right? So I come up here and I find my cash account, and the third, and nothing there, and the journal page 1, and $200. Now we have to pay attention. I had $800 debit balance, so I credit for $200. That makes my cash go down, right? So 8,000 minus 200 gives us $7,800, stays on the debit side, and we come back to here, right? So that is the process of posting, okay? Of posting. Now I will warn you that everything does these just a little bit different. So your pictures in your textbook show you one way of how these look, and your computer homework, the Connect homework, looks just a little bit different, but the process is the same. We have a spot to record transactions, and we have a spot to keep track of balances, right? The next thing I'm going to do, I'm going to go through a little computer example so you can see kind of what your big problem for your homework is going to look like. And we'll look there about how we do the posting on the spreadsheets. Regardless of that, your takeaway from this, right? You need to know how to be able to journalize a transaction, and you need to know how to post it to the general ledger. Those are the first two steps in the accounting cycle, so we're really starting kind of the meat of the matter here. There we go.